Splashcreen. Wake up, motherfucker.
Yo, what's up? What's up? All right, market's open. Okay, so it's a Wednesday, right? Tax day or whatever. But I think I'm more concerned about VIX expiration. Today is VIX expiration day. And on Friday, we will have options expiration for the month. Okay, not the triple witching options expiration, but probably maybe significant. All right, let's go. Let's go to it. Oh man, fuck, lots of stuff to cover. Okay, let's play a video first. Oh man, got a lot of videos here. Holy shit. Okay, which one should I play first? Okay, let's play this one.
Yes, there will be some type of a decline without a question in the next 10 to 20 months, and it will be earth-shaking, it will be saber-rattling, and it'll have Wall Street in a tizzy, and it will create headlines that will be that will dwarf anything that's happened at this point in time.
So that's Paul Tudor Jones, one of the greatest traders of all time, alongside George Soros. And we will talk about 1987. 1987 was the big crash on a Black Monday. Okay, so let me go forward a bit. I don't want to play too much of this because I'm going to get copyright striked, I guess, because they always try to take this video down on YouTube. Like these are the only copies you'll see. This was a PBS documentary. Only people with VHSs that still save this thing have the original copy, I guess.
New York Futures Exchange, the knife. These people are betting not on a company or an industry, but on the future direction of the entire economy. And this week, just before Thanksgiving, 1986, the big news is not good. The Iran-Contra affair has just broken, the insider trading scandal is heating up, and the market has been going nowhere.
Okay, if you're not a boomer, you don't remember Iran-Contra. What happened there was Jimmy Carter, and then Nixon. I don't know who did. I mean, there was oh my god. I guess Nixon got, then Reagan, right? Reagan got the blame. Reagan was the last one. So you have to remember the hostage situation in Iran, and then there was like another hostage situation in Lebanon with Hezbollah. So the same players, all these people, fucking, this was like what? Come on, 40 years ago. Same bullshit with Iran and all that. So what happened was they were taking guns and passing it off to Nicaragua to pass it off to Iran so that Congress didn't know about it because they were going to trade guns for the hostages, I guess.
Okay.
To the fast market, 85.90.
In spite of the bad news, Paul and Peter are convinced that at any moment the market is going to soar.
With a half an hour to go, because not only will we be selling, so will everybody else in the street. Which means I want to get Paul up. Paul.
Yeah,
Do it again. Another 300. Sell them. 3 minutes. 3 minutes.
Paul has bet a lot of money that the market is about to go up, but nothing is happening. If he's bet wrong, he's in trouble.
The market goes down so much more faster than it goes up. It's incredible, right? It can take out 2 weeks of work in 3 hours. In fact, it took out 6 months of work in 1 day in September.
We're going to get a big move one way or the other. And it's just right now trying to gauge which way that move is going to be. Everyone right now has to be negative walking in the morning, looking at the newspaper, looking at the fact that the bonds are down, and yet this thing is maintaining an enormous premium to spot. All that stuff is sitting there looking at us every morning in the headlines, and yet the market won't go down. It's telling a different story than the headlines are. What is happening again is that the The market continues to build energy, and every time you see these incredibly sharp downturns, all that's doing is, or to me, all that is a signal of the fact that people are absolutely skeptical, negative, and to a certain extent frightened through here, and yet the market won't break. It is screaming to me that it wants to go higher.
At times like this, what gives these two confidence is a theory that says the stock market moves in cycles, in patterns. And Paul and Peter subscribe to the Elliott wave theory, which...
All right, you heard that? Patterns, cycles, Elliott wave theory, stuff that I've been talking about recently. So this is all coming together for you now.
says to them that what happened 49 years ago, in the late 1920s, is happening again, now.
If the market is a reflection of people's behavior and people behave similarly in similar circumstances, then history of market prices may give us an indication of what may happen in the near future. Well, the last great bull market really was the 1920s. And we looked back and did a statistical analysis on the 1920s through today, punching in literally thousands of Dow high-low and closes to run correlations between what happened in 1925 to 1928 to what happened between 1982 and where we were in 1986. Well, that correlation turned out to be over 90%. In fact, since I've run that correlation, the correlation has gone up from about 90.7% to close to 92.2%. And as you
Which
can
one
see,
is the 20s?
the 20s is the blue and the red is the 80s.
So what day back in the 20s are we at right now, approximately?
We're like in early August 1928.
And so let's see, if my memory serves me correctly, and we've got another 40% in the Dow on the upside.
Correct.
So we were talking
And in
about
about another year, a little over a year, up moving the Dow.
and then it looks like there might be some storm clouds in the horizon.
To say the least.
The correlations here are phenomenal. That's incredible. What are the chances of taking any 2 5-year period in the stock market and getting that kind of correlation? What would you guesstimate off the top of your head?
I mean, it's got to be astronomical. You're talking 1,000 observations. I don't know, 1 in 1,000. It's really pretty scary. You know, if it looks like a duck and it acts like a duck and it sounds like a duck, it's probably not a chicken. And that's what's scaring me about the activity in the stock market right now.
Some analysts disagree, but Paul Jones and Peter Burish are among those who think there's a crash coming, and a big one.
You're probably talking about something with incredible fireworks, with unbelievable and unprecedented volatility, and with moves that will leave people gasping. It's going to be total rock and roll.
The market should continue to rally into the first quarter of 1988. A rough projection would be somewhere around 3,200 on the Dow. And then in March, April of 1988, there's weakness, and at some point shortly thereafter, and if you're going to hold me to a date, let's say the end of March 1988, the market then drops sharply and retraces, 50% of this bull move from 770 to 3,200 in a matter of a couple of months.
The last guy.
Okay. So he was close, but that wasn't right. The market actually crashed in October of 1987. So several months ahead of what he predicted there. Close, but no cigar. Okay. And it didn't go that high, up to 3,000 on the Dow Jones. So I am going to show you a recent video with Peter Borish, the last guy who was talking. And this is what he said about his experience during that time after the fact. So this was recorded in November of 1986. The market did continue to go up, but it did not crash exactly at 1988 of March. It was October of 1987, right? That's a big difference. So the thing is, you have to understand that we are traders. we're not gods, okay? We can't predict things precisely. You can get as close as you can with as much information as you can, but you probably won't be exactly right. The whole name of the game is to get as close as possible. And if you are wrong, however, you better adapt quickly and fix your attitude on the trade. So that's what makes a great trader. A great trader is the guy who realizes, shit, I'm wrong. I better get right, so that they minimize their mistakes. You will make mistakes. You will be wrong. The difference between the great trader and the poor trader is how you act when you're wrong.
Invest in. That put us as a firm far ahead of the curve. One of the greatest honors of my life was after the crash of 87, they had the Brady Commission. And I was seconded to the Brady Commission and to work there. I was the youngest person on the commission. And if you read the report, all the data about what happened intraday around that came from us because we had it. The big firms did not yet have it. In fact, it was housed out of the Federal Reserve Bank, the Commission of New York. And when it came time to going through the data, they didn't even have the ability to display it there. I brought them all over to our office. We even had invested in those big, large monitors. But we have to be careful when you go back to that. Everybody sees the outcome and they look at success. But the reality is, when we were building this model, there were points along the way and in the documentary where we thought certain things were going to happen. Maybe the rally was going to begin earlier. And if you watch it closer, we got really hammered on a couple of days there. We had to take our licks like all traders do and come back. Originally, when I had forecast a model, I thought this was going to happen and go into sort of January of 88. Many major market tops historically had happened in the month of January. But then when all the data lined up, and it's sort of interesting because we're in September, and when it lined up sort of post-September expiration then and into early October and then failed, then we got really, really confident. And that's where Paul's skills as a trader really came into play. And I always say that if I was a genius, which I'm not, but I got the exact low right and the exact high right in the market, he would still make more money than I would, because markets don't go straight up and down, and he's a far better trader.
Okay. That's a good lesson right there. Okay, we can try as best we can to forecast stuff. I can go like, yeah, I think oil's going to go up. I don't know when it's going to reach that target price exactly to the day. I can guess where it's going to be, okay, but it's not going to act how it is. We had Trump come in. I was still right. Oil would go up, but now it went up faster than I expected. So when oil hit my target, right, a couple weeks ago, it was like that oil ETF. I was like, it's already up 100%. That's what I expected it to happen within like 5 to 6 months, not within 2 to 3 months. I have to change my attitude and be like, well, I don't think I want to stick around. Okay. You stick around, you're going to get burnt. I got my profit. Move on. I'm going to software now, going to software. And guess what? Look at all the software. Look at Oracle, up 25% 2 days ago. Now it was up another 10% yesterday on the 2X leverage ETF. Now it's up another 7%, right? So you got to move. You got to move. You got to dance. You don't stick around. You don't stay with the same stuff. That's the trader's life. You got to be patient, and you got to know when to take your profits, but you also have to know where to move next. You're always looking for where the hockey puck is going. Like that's what Wayne Gretzky said. That's what makes the difference between a great player and a poor player, right? You look to where the hockey puck is going, not where it was. Okay, a lot of people started jumping into oil real late. They got burnt. Okay, you should have been in oil back in January, February, maybe even December if you were that early. Those guys made money. Anybody that came in late March after everything already went up, you got burnt. Okay, so that's the game. That's the game. You got to keep on moving. And that's why it's a hard game. Most people can't withstand this. They're too emotional. They get into their fifis. They get too stuck in their thesis and they don't adapt quickly. Okay, that's the difference here. But if we get the better tools, we can do it better. Okay, that's what I'm trying to say. All right, let's go on. Let's go on. Let's go on. Let's see what's up. What's up? What's up with the freaking markets here? Blah blah blah. Okay. CrowdStrike still wants to go up. I don't know. I'm not playing this again. Let's see what Palo Alto Networks. I already sold that one. Let's see, Palo Alto Networks. Yeah, I ain't playing that no more. Let's see, what about Palantir? Already sold already yesterday. I ain't getting back in this one. I see like Cloudflare. Yeah, this one's trying. I don't know. I think Oracle's a better play, but I think Oracle's already like way too over. Like, like you already should have sold a lot of it already, and like if you jump back in to get this one, this last bit here, you're pretty crazy. You're pretty insane. I don't know how much higher it's gonna go for Oracle. The S&P 500 has already hit pretty good limits here. I'm like, come on, man. We already have VIX expiration. We're gonna have options expiration Friday. Yeah, you think you're gonna go up to 7,000? I think I could target it at 7,100, maybe, but that would require semiconductors to continue up. So we have ASML earnings today in the morning, and it's down, okay, which is expected because we already had a nice rally up, so it could not overcome the February high or the January high here. Okay, that's what I expected. TSMC will report earnings tonight, okay, early morning, probably around midnight to 1 a.m. Eastern. So it's going to report on Taiwanese time. Taiwan will be like daytime while you guys are sleeping, and it'll already be reported earnings by 9 o'clock Pacific, my time. So you already should know. And TSMC, again, is up to where it was up here back in February, the same high. Do you think TSMC can go up higher? I don't think so. I don't think so. And TSMC does not surprise, okay? TSMC always has monthly reports. People can model how well TSMC does over each quarter very well. It's not going to surprise. People know what it's going to do. There's going to be pretty much no surprise unless they say, wow, growth next quarter is going to be amazing. Growth next year is going to be amazing. I don't know. I think that's already modeled out. I think that's already priced in. So let's do this. So since semiconductors has went a lot higher above this resistance on the orange line here, okay, so it's already at 400, way above the 380 where like it would like have trouble hanging out. So I think this is way oversold, right? I mean, way overbought. So let's see. Let's see. 1, 2, 3. So let's do some Elliott wave here. How about this? How about this? Let me change this. Let me change this to this. Something like this. Okay, let me change this to this. I don't know. Maybe it'll look like this. Let's go into June. How about that? Late May, and then I'll move this to late May. How about that? Let's go to May. Huh? How about this? So maybe I'll do something like this. Okay? Let's move it like that. So this is the Elliott wave stuff. I don't know. I don't know what you're gonna guess for Elliott wave. I'm sure a lot of people have all kinds of babble astrology, and they can go like, yeah, it'll look like this or something. I don't know. Whatever. But we don't need to do that. We don't need to do that. Okay. This is nonsense. This is just guesswork here. Okay. Now, would I start trying to short this? Yeah, probably. I would probably try to short this today, tomorrow, Friday into Monday, Yeah, I think at the very least it will go down to here. At least, so you can get that much. If you think it can get down to the bottom of the yellow area, you're gonna have to figure out where these zigs and zags are. It's not gonna go down in a straight line. It'll get stopped here, it'll bounce. It'll get stopped here, it'll bounce, and it'll get here. That's the problem. If it was a straight line, trading would be easy. It's not, right? Just like here. You go up, you go down a little bit, you trap some people because people think it's going to keep going down. They get suckered in, and then it bounces back, and then it jumps over, and then people think like, oh, that's enough. It's going to go back down now. Wrong. Go up, 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 up. See? It's not so easy, is it? I don't got no crystal ball. I can't tell you how far it's going to go up. I thought it'll probably go up here, but it already jumped over it. And then once it went over the orange line, it just kept going up even higher. It's all about the positioning, right? It's all about those options. A lot of people were shorting down here. They all got burnt away. They had to keep covering it. So you have to adapt. What can I say? I can't do anything. And if you look at oil, you see this? Oil keeps going down. Oil, you see? If you start buying the dip here, a lot of people were trying to buy the dip here, and you held it. Now you're below. Now you lost money. This is not the time to buy oil anymore. It's the time to buy software. So there you go. That's the problem, this game. And now I'm looking at Moderna. So let's look at the COVID vaccines and all the other vaccines. These guys want to get into cancer vaccine. So it has been doing quite well since last quarter. And it's bounced above this green area. Perfect. It held it. It's going here. It's zigzagging here. It's ready to continue up. So there is a leverage ETF, MRNX. So let's see. This is a new one, right? We can go a lot higher if Moderna wants to go a lot higher. Let's see. Where's the earnings? Estimated earnings date. So a couple weeks at the end of April. Will this thing explode out of here and go up higher? I don't know. If it does, that's a lot of money there too. So you got to keep looking. We got to keep looking. And then we have HUT. Let's look at HUT. So I know there's a lot of people trying to get into this AI stuff. So, let's see if it retests 61 next week. If it retests 61, I'll buy it. Similar with IREN. Similar. Let's see. Let's see how it acts at 49. If it does, I'll buy it. So all this AI, Anthropic stuff, Bitcoin might recover well. If it does, if Bitcoin actually breaks out, which this is 66 trading days right here that it went in a range. Usually it's 40 to 80 trading ranges, trading days before it completes its move here. So it goes sideways for a bit and then does its move. It went down this time. So now let's see if it can go up this time. Then yeah, Bitcoin, if Bitcoin goes up alongside software, HUT, IREN will go up a lot higher. Okay, Anthropic had some news with the Bloom Energy yesterday. Bloom Energy went up like 20-something%. So yeah, there's a lot of hype still, but you have to pick the right stocks to get into, right? Before they were hiding out in semiconductors. They were thinking like, okay, I can hide out in Micron. Yesterday, Micron went up 9%. Why? No idea why. It just went up all the way to the top here. The last top it made in March. No clue. No news. Just wanted to go up, I guess. Right there before earnings. And guess what? I guess it's ready to go back down, right? It's going to go back down, go below this red line, and go back to green. Maybe. But by the time it gets to green, maybe it'll be late May or something like that. It'll just zigzag here. It'll just try to make a fight here. I don't care about this. I think right now you just want to get into software. It's just really easy. You just go look at the day in the morning. You wake up. You look at these software companies. Which one of these will go up 10, 20%, 10 to 20% today? And then you just go, just like it did with Oracle 2 days ago. Each of these will just have its day where it's just going to go up. And that's it. So every morning you look at it. So the whole list of ETFs I got scrolling along the top. Put it on your watch list every morning. You wake up before the market opens. You look at it. Look at the pre-market. Look at how the NASDAQ is doing. Look at how the S&P is doing in pre-market. Then once it opens, you get ready. You just buy and just flies. Buy and fly. Let's see. Hope, right? Some of them will just crap out within 10 minutes. You'll know it doesn't work and you'll just get out. That's all you got to do. I think it's easy money that way. It's just like a slot machine every damn day, huh? And that's it. You just wake up in the morning and see if you can get that 10, 15%. That's it. I have no clue what the news will be. I have no clue what anything will be. I don't give a fuck. This is a bottom. Look at Oracle. This is a bottom. It's easier for it to just recover and go up now than going back down. The only way it's going to go back down is I got more Anthropic news to push this sucker down on stuff. I guess. I don't know. Iran really... It's really hard for me to see how much Iran's going to matter for software companies. It's just too beat up. It's been beaten up for so long. And you can see what it did to Oracle during Iran. It's like nothing. But some of the like software companies really didn't care. Some of them didn't really care. Like you see here, it was already crashing before the Iran news, and it was going up, recovering while the Iran stuff was happening. Only it went down at the quarter end because, probably some option stuff happened and this thing had to fall. But after that, it just quickly recovered again. Even before the taco, it was already moving up. Then we got the taco, it moved up even more. So I would think that any new Iran stuff, any new Anthropic stuff, if it pushes any of these guys back down, I would just be looking to buy again and just wait for it to recover, because these things will have like earnings way later. You see, this one doesn't even have like any earnings things. Let's see. What's the next earnings? Yeah, so this one, May 20th. See, you got another month, which is great because it gives you a lot of time to trade before the earnings happen. You don't need to trade and guess what earnings will do. You can trade before the earnings. You can make a lot of money just before the earnings, right? This thing can zigzag, and you just make money off of it before the actual news happens. So I think eventually it will just break out. This thing here, it doesn't have much history, this one, so it might go parabolic. Like once it gets through, let's see, crowd weave, core weave, 140, somewhere around 140, it could probably get to 200 and maybe even higher. And then if you do the leverage, yeah, you're gonna get more money that way, right? Who knows? But we got to get through Netflix will report earnings Thursday. I don't know. This guy is already at resistance. You see that? They just pushed it right back up to the lines. So it's like ripe to go down. It's like they just did that on purpose. Push it all the way up. And then it makes it easier for it to disappoint, because earnings requires you to be, where is the price before the earnings? And what are the people's expectations? If they expect a lot from Netflix, because you see, they did not expect a lot from Netflix going into the previous earnings. It was going down into it, and then it kept going down. And then once it wasn't going to merge with Paramount, right? Or was it Warner Brothers, right? So Netflix didn't get Warner Brothers, like Paramount got Skydance. So Skydance bought Paramount, and then Paramount bought Warner Brothers. That deal went through, and then they popped. It popped because they got paid for losing the bid, because they made Warner's Brothers, if they did not accept their deal, they owed them some billions of dollars. And that pop was equivalent to how many billions of dollars they got from losing the deal. And then after that, just like kind of melted back up towards this resistance. So this doesn't look good either. I think this is just gonna crap. I mean, I don't know, like if Netflix really made enough growth. I think they hide a lot of their data too. Every earnings, they keep hiding data. They don't tell you how how many new subscribers they have. They stopped doing that a year ago. They don't tell you a lot about the metrics. Maybe they talk about how many ads they play per and how much money they get per ad. Maybe, I don't know. But if they keep hiding stuff, maybe they'll just get punished anyway. So that's another problem with that one. But that's the big earnings of this week. So there's no tech earnings after TSMC. We don't have anything else, and this is the last earnings you'll see before the weekend. Then maybe this will affect things. So, right, when we got options expiration. So, yeah, I mean, I would be selling into this. Like WebL, I just sold this to like right now while I was talking to you. I set an order to sell this, so I'm done with a lot of my WebL. I'm not holding much of this right now. So when I told you to buy on Monday, what was it? Down here at $15 for WebL 3x leverage. So if you went from the bottom to the top, you got 44. If you sold in the taco day, 35. If you bought back and then went up again, you made some more money. Okay. The other one is AIBU. I told you to buy on Monday. If you bought exactly at the bottom on Monday, that's 40% too, right? Pretty much 41. So good. I think that's good for 2 weeks. 40%. So you made 100% on Oil U, or you switched over to NRGU or whatever, and Gush. So you should have made like around 100% plus, maybe, on that one. Okay, and that was like 2 months, and then plus 2 weeks, you make another 40%. So you keep doing this over time, you'll make a lot of money. I mean, it's not hard. It really isn't. And then if you do a little bit of day trading, like 10% here, 10% there, you add that to your pot too. And then after one whole quarter of doing this stuff, then you take it out and you save it, you put it in cash, you buy bonds or your money market fund, and you get 3.5% while you wait. You wait for the next big market crash, you just use that money and just dump it in something else. That's it. And you keep doing this rotation. And I think a lot of people, they won't do that. It's very hard to do precisely, correctly. They won't do that. Most people just buy and hold. If you just buy and hold, guess what? You went nowhere, right? So if you didn't get out in October in the S&P 500 and move somewhere else like oil or silver, gold, you could have done anything else. You had 6 months and you end up what? Between October, Halloween at this high, and then now we're back up here, which is, so you only made like 1% on the S&P 500 if you didn't trade. Like you just held the S&P 500 from here to now. So that's 6 months and you only made 1%. You made less than bonds. Bonds at least gives you like, okay, so let's say you have a T-bill that gives you 3.5%, right? Over 1 year. Divide that by half, that's like 6 months. So bonds still kicked your ass. That's like, come on, bro. It beat your 1% on the S&P 500. Now you see what I'm saying? If you just buy and hold, you're missing out. But the problem is most people, they can't catch where the next trend is. They won't know, like, oh, you got to go to silver. You got to go to oil. Now you got to jump out and then go into software. No, they're not going to do that, because so most of this move here, I was just in semiconductors. And then after October, I just got out bit by bit, because I started getting out around late September into October. And I kept, every time semiconductors made another new high, I just sold another chunk. And then January was the last one. I sold another chunk. And then late February, it was like, dude, this ain't going any higher. I sold the last bit. And then that was just before the S&P 500 just went, puked everything out because of Iran. You see? So when it's going straight up, I don't need to tell you anything, because you will do probably the same as anyone else in the market. There's no edge. But when the market is going sideways, then I have to tell you what to do, right? Because that's the hard, challenging thing. When it just goes in a straight line, like from COVID, right, up into 2021, why do I need to talk about anything? Nobody needs to talk to you about anything. And the same thing between 2022 into 2023, there was nothing to talk about either. So when the market starts going sideways, that's when you start looking at it. Otherwise, you don't need to do any thinking. You turn off your brain, it'll work. Okay, let's see. Won't investors questioning OpenAI's valuation also hurt Oracle valuations since they are in partnership? I don't look at fundamentals. I have no idea. I didn't even know Anthropic was going to kill any of the software stuff. I just look at the chart. I see the chart looking bad, I get out. Because whatever people look at in fundamentals should be reflected in the price. It's public knowledge. Everything is public knowledge. Okay? The only thing would be like noise from news. So the news could be actual real structural change, right? That's what people are worried about, the Anthropic stuff. They think that's a big structural change. The other thing too is like they're worried about Oracle's pricing, because Oracle has a big problem with how much they burn cash, and that was what caused this dip here in the S&P 500. This whole dip here in December. So let's see. Yeah, pretty much December was caused by Oracle earnings. So they have issues on their own. I don't know if OpenAI, whatever, they have other things. And then people were saying like the Iran stuff, like the Iranians were shooting at like a lot of their data centers in the Gulf. I don't know. It's just noise to me. I just like, is it materially going to change how Oracle is evaluated? That's something that I can't help you with. I don't, because for me it's just a trade, you know. I don't really care about the long-term viability of Oracle right now, because if you look at the overall chart, it's just ridiculous. It's just ridiculous. Okay, so if you look at every time it has earnings, it seems like nobody knows what the price should be. Like nobody has a clue. Like this earnings, it popped up 40%. Let's see, what's this earning? This earnings, let's see. Now, this one wasn't that much, I guess. And then after this one, yeah, I mean, this whole thing, oh my God. Like, if you look at this whole structure, it's volatile. It's like you go from 128 to 340 and you go 8 again. Like, the only reason your price is like that is because nobody can model your growth. So this is a Wall Street problem. Wall Street doesn't understand how to evaluate Oracle. And so it creates this crazy pattern where they get overly optimistic, then they get overly pessimistic. I'll trade it. But as a fundamental, like over next year, 2 years, 3 years, 5 years, 10 years from now, I don't know if this is a good price, right? I can't tell you that. You're going to have to talk to a fundamentals guy. But from a chart perspective, this is great for trading. This is great for trading. I don't know. Like, if you look at the long-term chart, this is bad. Like, it has this massive explosion here. So this is a monthly chart, and it goes down. This signals that it's going to go sideways for many moons. Many moons. So unless this move was incorrect, if this move was a mistake, and it can actually get back up here to the top and then hold it up here for several moons, I'm guessing it's not going to do that. I'm guessing it's just going to go up here to near around 200, get people very excited, and then some earnings will come out and it'll be like, whoops, it'll just go back down. And if it's going back down in the wrong time when the market is going down, like the whole S&P is going down, then it probably just goes back down to 100. And then you have this zigzag that's even larger, like up, down, and that would mean like this will take many years to resolve because nobody understands Oracle at all. That's it. So this is great for trading, though. This is perfect. This is a perfect thing for trading. Not good for investing. Not good at all. Intel will be the one you want to invest in because it's a piece of junk stock, right? It was like a stock that got beaten down all the way back down to $19, which was the same price it was in 1997. And now, because of this rally, it's going back up to the .com levels. So I would say, like, if you can get Intel at $40 or less, like $20 to $40 again, I would just buy it, wait 10 years, and it'll be at like 200, 300, 400, 500 10 years later. That's it. That would be a real investment. Oracle, I have no clue because it requires us to understand too many things. They laid off a bunch of people. They're hiring new H-1Bs. Then you got AI coming in. You don't know if they are going to be the leaders of AI or they're going to be the suckers of AI, where some better competitor will wipe them out. Intel, has a big moat. First, it gets welfare from the government. Okay, because they need at least one American company that makes semiconductors. Because right now, most other companies do not make their own semiconductors in the United States, right? Very few. You have maybe Analog Devices, Texas Instruments, but Texas Instruments, Analog Devices only pretty much does mixed signal analog chips, not state-of-the-art chips. These are not the state-of-the-art. Analog mixed signals chips are very like 2-3 generations behind digital chips. Digital chips are the forefront. So you need at least one advanced digital semiconductor company that makes their own chips, Intel. So they're protected in that sense, right? So government protects them now because now it's just basically a government company, all right? Because they can't be bankrupt, because if they go bankrupt, then we're all dependent on Taiwan and Korea. So if you're going to defend Korea and Taiwan like you can defend oil in Iran, good luck with that. So you're going to need at least one company in the damn America. So that's why if I look at a fundamental company, I look at something like Intel. Oracle, I don't know what protects Oracle, right? Oracle has no protection. It's just a software infrastructure company. So everybody else can do data centers. Google has data centers. Amazon has data centers. IBM can do data centers. Like, what does Oracle bring to the table that other people can't do, right? If you're thinking hardware is going to protect Oracle, that ain't it. And now you got to compete software, right? The only thing Larry Ellison said was like, oh, their data is secret. Like, their data is more exclusive. Okay, if they actually have data that no one else has, okay, maybe. But again, I don't know. But I'm not a fundamentals guy. I don't look into that deeply into it. I just look at a chart like this where you see Intel has been going sideways for, let's see, 26 years. It's stayed below $61. Every time it went above $60, it went back down. $60, it went back down. Now it's at 64. If it goes back down again and then it holds like 40, guess what? That means sometime in 10 to 15, 20 years, that 40 might become 400. Okay, so then you could just load up on that. All right, I think that's enough. I can't keep track of oil. You don't need to keep track of oil. You should have been in oil beforehand, and then you get out. That's it. I don't need to keep up with the day-to-day of oil. What's up, HB? What's up, Duale? You called it with oil. Soon oil dip. Tech went up. That's right. You keep moving. You keep dancing. Okay. Now that Bitcoin's going up, you got IREN. You got HUT. I think we got to do HUT. We got to do IREN. Maybe something else. Let me see. What's the other one? Fuck. There was another one. I got a list here. Somewhere. I'm gonna talk about once I do my Substack eventually. Oh, Core Z. Core Z. That's the other one. All right. Let's see. Well, let's see what the chart of Core Z is. So Hut. Look at this baby. Hut here at 70. Yes. Yes. Finally. All right. Let's see. Core Z. All right. Core Scientific. Oh, this ugly piece of junk doesn't have much history. It's up 27% this week. Oh, if it breaks out, so if these break out, IREN, Hut, Core Z. So you see this? You see this? So you had this move here, this May from last year, all the way up till November, and then pulled back. Now it's trying to curl its way back up. So IREN, Hut, Core Z, all those three. If Bitcoin shoots up, software keeps going up, these will go even higher. I know they already went up a little bit. Hut definitely went. I got out of Hut to go into oil in January, you know, and I'm looking at this. I'm like, okay, this better be real because it's 51%, right? This had a really good recovery. It's got Trump all over it, okay, because Trump's sons are in this company. And it's like, dude, once we break this 70, I don't know how high it will go, but it's going to go really high. Okay, so, but the question is, if the market is going down next week, I want to see it hold around 57. Okay, 57 to 60. If it holds there, zigzag, 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 maybe it'll dip a little bit lower, closer to 45, shake some people out, I'll buy it. Okay, so that's what I'll have to talk about with you guys on the Substack. Be like, this is where I want to buy this. This is where I want to buy that. Boom, 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 boom. And then we go on this one. Okay. What the fuck? Are you sports betting? Isn't it World Cup? Isn't it World Cup coming up? What is this? Like, you guys have too many little side league competitions. I can't keep track of football, man. Holy crap. Jesus, you guys. Isn't Italy out? Italy is not even going to go to the World Cup. I don't care about damn Spain. Yeah, it's me, Deninsky. Yeah, it's me. Shit. All right. Lost a fortune. I don't know what the heck you're doing. Okay, let's play another video. Shit. I need to take a break. Champion League is better than World Cup. Oh, okay, Champions League. All right. Oh, you guys are. Holy shit. Hold on. Okay, so AI is doing a real good job here. Let me give you a trailer right here.
Told you the laws of physics were literally being destroyed.
I'd say you were going crazy.
Maybe I am crazy. This was supposed to be our timeline. And somehow we ended up over here.
This isn't a glitch. Let it go. I'm gonna need someone who isn't afraid of risk.
Fry!
Listen to me very carefully.
I'm gonna get you out.
So scientists are now saying that there are a series of baffling incidents that appear to defy the known laws of physics.
The math doesn't add up anymore, which means someone, something, is changing the math. Is changing the math.
It's like they built a back door into the universe.
Uh-oh.
Hello, Neil. Time to divide everything. Time to divide everything by 0. Ha 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 ha.
Neil, we're gonna die! Let me think, motherfucker.
Oh, shit.
Stop them. They're getting away.
To be honest, this whole theory sounds pretty out there. theory sounds pretty out there. You really shouldn't have called me, Neil. You don't understand. He's collapsing the goddamn multiverse.
I'm not going back, Neil!
Send in the fucking drones.
So it was all a big fat lie! Going back, Neil!
Send in the fucking drones.
So it was all a big fat lie!
I thought I told you to shut him down. It's not what you think.
Ouch. Not the nut.
All right. All right. Okay. So, yeah, you can find that on Twitter. Holy shit. Anyhow, AI is getting too good, guys. We're going to be obsolete pretty soon. So, this is what we're going to have to talk about. So, I'm going to read these articles for you. Okay. Let me get something else. Screen here. Okay. See how many I can get through. I'll have to continue this later today, I think. Okay, I just gave you a quick update of what I'm thinking about, and yeah, I can continue this later because I just wanted to talk about a little bit about the Elliott wave stuff. But let me do this article here, okay? And then I'll do a little bit of the Elliott wave stuff. And you'll see a little bit of what I do. But the major thing when you look at section is you look at the relative performance. So you look at the ratios. And I mentioned that in the earlier stream. So we'll go over that later. Okay, that's the basic way. That's what most people do. But because I got all this DeMark indicators, Elliott wave, I'm going to tell you stuff that most people won't do, which is going to give you even better edge. Okay. I don't just use one signal, you know, people that depend on one signal only, they're not going to make it. I have like a list of things I look at. And because I have a big list, I get pretty lazy. I hate it when I actually have to care and look at this list of things I have to check. So it's kind of like before you... Yeah, there's this guy named David Keller. He's the chief director, technical analysis guy at Stock Charts. So he's kind of like an amateur pilot. And so he always does it like a checklist, which I think is a very good way of doing things. You have a checklist of things you want to see. It's not going to be like some kind of like, oh yeah, I get one indicator and that indicator will determine everything I do. No, I have to look at everything on a list. And if I check the boxes off, then I make my move. If it doesn't check all the boxes, I don't know. I have to like be like, oh, I have to look at if the ones that are more important got checked off. But anyway, this article talks about DeMark. The math of God. Market predictor Tom DeMark has some big names among the faithful. Past the 2 Bentleys in the driveway and beyond, the pool and mini water park, the home theater, and with enough memorabilia to equip a basketball team, Tom DeMark has his office. A dark wood-paneled lair with 6 computer screens. The office abuts the master bedroom of his Scottsdale, Arizona home. It has to, DeMark says, because he often gets up after midnight to scrutinize charts of stocks, bonds, commodities, and currencies to see if his numerical system for predicting their behavior is working. Since he started in the investment business in 1971, DeMark has advised some of the biggest names on Wall Street, men such as Paul Tudor Jones, we saw him in the video, and Leon Cooperman. He's a consultant to Stephen Cohen, founder of SAC Capital Advisors, which manages $14 billion, and John Burbank, founder of $3.4 billion Passport Capital. SAC and Passport each own a piece of DeMarc's company. DeMarc has a phone on his desk that's dedicated to Cohen, whose hedge fund has made money every year, save one, since 1993. Okay, DeMarc's system for predicting where markets will move, divined from 4 decades of chart gazing, is based partly on the recondite mathematical relationships that devotees see in the design of the Parthenon in Athens and the Great Pyramid of Giza. Okay, so I talked about the pyramids a little bit last time, right? Get DeMarc's followers talking, and their enthusiasm for his market calls is unbounded. When I use DeMarc's work, I feel like I'm wielding Thor's hammer, says David Goel, managing partner at hedge fund Matrix Capital Management, which manages $2 billion. Okay, so let me skip down here. Burbank says that he's tested DeMarc's algorithms and that they're much more predictive than other systems. Using DeMarc indicators is like seeing the market in color when before you were looking at it in black and white. Okay, so let me skip down again. Okay, blah, 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 blah. Okay. DeMarc, 65, is a member of a group of market forecasters who devote their days to poring over price charts looking for recurring mathematical patterns. Most call themselves technical analysts, as opposed to those who rely on fundamentals such as earnings and economic growth. DeMarc says fundamentals do matter. He also believes that markets are governed by waves that crest and fall based on a series of numbers called the Fibonacci sequence and the closely related golden mean or golden ratio. Okay, blah, blah, blah. We don't need to talk about the golden ratio. This mathematics is embedded in the structure of the universe, says Cynthia Case, whose Case & Co. uses wave analysis to compile a weekly forecast for oil and natural gas prices. It is the language of God. Okay. Now, let's see. Anything else? Blah, blah, blah. There are the detractors here that don't believe it. Okay, technicians have been relying to mine market intelligence from charts since Charles Dow, who founded the Wall Street Journal in 1889, started comparing his industrial and transportation indices. Robert Precher has been publishing his Elliott Wave Theorist newsletter since 1979, popularizing the ideas of Ralph Nelson Elliott, an accountant who wrote a 1938 book called The Wave Principle, which examined how mathematical oscillations determine prices. All right. Now you see where I'm going with this? Okay. I don't think I need to do this. Okay, last thing I want to talk about. So DeMarc's company, Market Studies, makes money by charging traders for access to his indicators. It collects several $1 million from SEC Capital each year. It also sells subscriptions to the indicators on the Bloomberg Professional Service for $5,000 a month. So before, if you wanted the DeMarc indicators, you first had to pay $15,000 to $20,000 a year to Bloomberg for the Bloomberg terminal, plus $500 a month to DeMarc for his indicators. That's why I really never used them, because I'm like, whoa, this is too much money. I ain't doing it. But his son has made Symbolic, and it just cost me like $900 a year to get those indicators now. So that's why I'm using them. And since I have them, I might as well use them to improve my timing. Right? There you go. So we better get on it. And I think now I have the DeMarc, I can combine it with the cycle stuff. I can get a lot more bang for my buck. Okay. Let me see here. Jason Pearl. Let's see. Okay, let me read you this stuff and then we can close it out. See, I got how much time I have left. Okay, got some time. So let's do this. Okay. So let me read you a little bit here. So, okay, the Mark Indicators by Jason Pearl. This is an old book, but it's pretty much the only book that makes this DeMark stuff understandable. DeMark has written his own books, but nobody can understand what the hell he's talking about. So most people use Jason Pearl's book. Jason Pearl works on UBS, managing all those trillions of dollars in UBS in the Swiss banks. So anyhow, so I'm going to skip to this chapter on TD wave. So this is it. Where are we going and when will we get there? Impatient children ask their parents during a long journey. Traders often ask me the same question about price action when they're looking for insight into market direction and timing. I find that Elliott wave theory addresses this question, and I am fortunate enough to work with some extremely good Elliotticians. Yes, while the Elliott wave theory appeals to me, I get frustrated by this subjective manner in which many people seem to apply it. As with politics, everyone has an opinion and a preferred Elliott wave count. See, this is my problem too. I never got into Elliott wave because everybody could look at a cloud and say, like, that's a bear, that's a hippopotamus, that's a horse. Like, bro, forget that. If you can't tell me there's a systematic way to prove that this is a wave 1, a wave 2, a wave 3, wave 4, wave 5, it's based on your opinion, then I'm not going to use it. Okay, that means I can make believe whatever I want to because I'm biased, right? I'm biased to think maybe Bitcoin is going to go up or down. I'm going to make my 1, 2, 3, 4, 5 look however I want it to look like to match what I feel. I don't want that. I want it to be objective. I don't care what I think. I don't care how I feel. I care that there's a systematic way to measure something. And based on that measurement, I will say, like, there's a better probability that it will go up or down. Okay, based on that. So everyone has opinion and a preferred Elliott wave count, but the opinions and counts aren't always objective or even rational, and are invariably dictated by preferred directional biases. Fortunately, DeMark offers a solution to this problem. He saw merit in the wave principle, but he decided to create rules, which he called TD wave, to ensure objectivity in Elliott wave application and interpretation. Unfortunately, DeMark provide a detailed explanation of TD wave. In fact, in his first book, The New Science of Technical Analysis, he devoted just a few pages to it, and he never referred to it again in any of his subsequent books. As a result, I field more questions about this particular study than any other TD indicator, with the possible exception of TD sequential. I've lost track of the number of times someone has said to me, I don't suppose you've written anything on the subject. And so, in the interest of TD wave glasnost, I will now give a more thorough explanation. Okay, so this chapter is it. This is the only chapter that explains how this crap works. The underlying Elliott wave principle. No discussion on TD wave would be complete without first reviewing Elliott wave theory. So let's look take a look at the underlying wave principle and then see how DeMark modified it to remove the more subjective elements. Ralph Nelson Elliott, inspired by the writings of Charles Dow, developed his Elliott wave theory in the 1930s. The difference between his theory and Dow's can be summed up like this. Dow classified bull and bear trends in terms of accumulation and distribution phases between institutional and retail investors. But Elliott described markets in terms of 3 impulsive directional price movements, wave 1, 3, and 5, coupled with 2 separate non-impulsive counter trend correctional moves, wave 2 and 4. The Elliott waves ensuing reversal unfolds in a sequence of 3 waves, 2 of which, waves A and C, are against what had been the dominant trend up until that point, and 1 of which, wave B, is in the direction of the previous trend. Okay, let's just skip ahead, blah, 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 blah. It's this. Okay, it looks like this. Wave 1, 2, 3, 4, 5, and then you stop at A, B, C, going down. Okay, and if you go down, you go reverse the other direction. You go, I can just rotate, I can just flip this, right? I can go 1, 2, 3, 4, 5 down, and then A, B, C going up. All right, so that's what it is. That's basically all it is. Now, DeMark made all these freaking rules. Okay, TDD wave requirements for wave 1. The origin of the TDD wave is up a sequence is defined at blah 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 blah. The wave 2, 3, 3. I don't need to care about this. So I got the software that does all this, right? I don't give a fuck. Okay, nobody's gonna read this. Like honestly, nobody's gonna be unless you got major autism. You're not gonna read that. All right, he's gonna read this. But there's rules. There are a lot of rules. And then it's all objective. So now I can go in my software and go like 1, 2, 3, 4, 5 without guessing where the hell 1, 2, 3, 4, 5 is. Okay, it's all set for me. And that's all I need. And that's all I need to tell me where anything is going to be. And that's it. Now, the key part I'm going to say is like, I'm going to add with it the cycles analysis, right? If I can figure out where the 5 is and where the 0 is, or where the C is, and match it with my cycles, boom, I can make this even better. That's the key goal that I'm headed towards. And that's when I can find the real good tops and bottoms of everything I'm looking at. So that's it. That's all I want to do. That's all I want to do right now. So that's the goal. Okay, that's basically it. That's all I need to do. So I'm gonna show you this article. So DeMark is not a god. Okay, DeMark is not a god. He was wrong. He's been wrong. So look at this one. This was in May of 2025. Bear market is coming with S&P 500 rally stalling soon, DeMark says. U.S. stocks are in for another drop that will eventually lead to a bear market in the coming months, according to veteran technical analysis strategist Tom DeMark, who accurately called this year's top in February and April's low. So he got February 2025 top, and he got the April 2025 low. I mean, a lot of people actually could see that anyway. So he made this stuff here, right? You got 13 count, you got 9 count, you got 13, you got top, you got bottom. Now you got 1, 2, 3, 4, 5, 6, 7. So he said this: a confluence of technical indicators, sentiment shifts, and cyclical timing models are flashing caution signs, suggesting a drop in the S&P 500 below 4,835, this year's intraday low in early April. That would represent a more than 20% drop from the gauge's February peak, pushing the index into a bear market. A top is imminent. Too much technical damage has been done. Stocks are vulnerable right now and can easily get hit pretty badly if anything quickly changes on the look. DeMark's warning comes amid a stock market rebound that put the S&P index on track to erase all of its losses suffered after President Donald Trump's tariff announcement last month. The gauge is up for the 9th straight day, Friday, which would mark its longest winning streak since 2004. A near-term top in the market may happen within days, says DeMark, whose firm DeMark Analytics LLC specializes in identifying market turning points, specifically the 5,669 level. which is right around where the gauge is currently trading, will likely leave buyers exhausted. The prediction is based on the market countdown study that involves comparing a security's closing price to its highest or lowest level 4 days earlier. Cycles of exhaustion develop when a pattern continues 9 times. The S&P 500 just produced its 7th count on Thursday. The mark focuses on a string of 9 daily moves, which don't have to be consecutive, but do have to be better than 4 sessions ago. That means 2 new closing highs for the S&P 500 would likely trigger sell signals, the mark said. Once that happens, weak technicals will pressure the index to resume its prior decline and eventually push the S&P 500 below 4,835. Historically, markets don't bottom on good news. Like last month on positive trade developments, stocks typically bottom when everything is terrible and everyone is forced to throw in the towel. But that hasn't happened yet. Stocks were just way oversold and overdue for a bounce. Ever since then, equities have struggled technically underneath the surface and are in danger of a big drop. That didn't happen. He was wrong. Because what happened after that, in the first week of May, Trump said he made a deal with China and it pumped up and jumped over that 5,800 area that he was afraid of. And then since that point, we've been going up ever since into October of 2025. So, you see, I don't want you guys to think like I am dependent on one thing or even 2 things or even 3 things. I have to have a checklist of a gazillion things before I make a decision. That's why real trading is freaking hard. Everybody wants something that's just like, oh, I see a 5, I see a 0, I see this, I see that, I see. No, it's not that easy. If it was that easy, everybody would be billionaires. The problem is that ain't gonna happen. That ain't gonna happen. So, okay, we're done with that. All right. So, what's up, Quantum Epic? I just reviewed everything. You can go back and listen over it. I'll be back later tonight. Get ready for Friday. I think that's really where things are going to go down, and Monday next week. So Friday into Monday, options will go crazy. Something's going to happen. We have to make another. Oh my God, Cloudflare is up another 5%. Oh man, they keep pushing that thing up. Okay, semiconductors recovered. Okay, I don't know. I gotta see if I want to short that at the end of the day. I don't know if I want to, honestly. It looks like everybody's kind of confused of what to do with that earnings. Oracle's still up 10%. Jesus. Wow. Wow, this thing won't stop. This thing won't stop. It just won't stop, huh? It's not pulling back, so it's like Oracle's the way to be. Crazy. All right. Yeah, so this is the last thing I'll show you guys to remind you. So one of the reasons I didn't think it was just going to roll back over, okay? The main thing was the Zweig breath thrust. So let me get this Zweig breath thrust. Okay, and then after that, let me get my BIN. Okay, this thing here. This thing. Okay. Yeah, have a good one too, Quantum. You going to work today? Hump day? You know, we got. I don't know if Deadman's gonna stream today. It looks like he took a couple days off. I got a lot of content for him to cover. There's been a lot of drama in the RLM sector. A lot of Boyd stuff going down. Know what I mean? Okay, so this is a reason I didn't believe in DeMark. Because of this signal. This is the Zweig breath thrust. It got triggered around April 24th. Okay. it gets triggered when this thing goes from below the red line to the blue line within 10 trading days. If you look at where we're at now, we have this below red line in March 20th, and we haven't even crossed above that blue line. It's already way, way over 10 days. This is never going to trigger. This is not like April of 2025, okay? This is the rule. This is the rule here. When this wide breadth thrust gets triggered, it's a rare signal, okay? It's good that it's rare because whenever it gets triggered, you pay attention to it. So it measures a massive shift in market sentiment tracking the 10-day moving average of advancing NYSE, so New York Stock Exchange stocks, moving from below 40% to above 61.5% within 10 trading days. If that happens, okay, what is the result? So let me see. Let me go here to this website. Reddit. Oh, great, Reddit. I just want the dang chart. Just give me the chart. Give me the chart. Give me the chart. Okay. So when the breadth thrust gets triggered, the S&P 500 1 year after it gets triggered is 23.78% gain. It's a rare signal, and once it gets triggered, I turn off my brain. I don't think about nothing. I ignore everybody. I just buy the dip, buy the dip. Anytime it dips, buy more, buy more. Maybe there's no dip. Doesn't matter. Keep buying. It just goes up. You got 1 year of the S&P going up 23%. That's huge. Okay. Most of the times, the S&P will average about like 5% to 10%. So when you know that something's going to go up 23%, that's free money. Free money. Can you believe it? Yeah. It's that easy. Turn off your brain. That's it. You just go. That's it. All right. If Dead Man goes live later, I'll be listening into it. Some of it, most likely. Yeah. Let's see. Guys, I got to go. Oracle's going up. Cloudflare's going up. Looks like those two are the major ones. I don't know if you want to keep betting on it going into Friday or not. Semiconductors probably is ignoring ASML. See, ASML is down. See, what's ASML down by? 4%, but semiconductor index is flat right now. Broadcom is up 4%, so positive 4%, canceling out the negative 4%, I guess. Doesn't matter. So it looks like software is the game to be. That's it. Just keep betting on software, I guess, depending on which stocks. So everything on the banner, pay attention to. We'll revisit it sometime down the line to see if like I got any other opinions. But so far, that's the way to go. Doing anything, silver not doing anything. GDX Do YOU is down 4%. Hut Iran, yeah, I'll be looking at that, and core. Those will be the three I'll be looking at next. Maybe next week will be the time to buy those three, and those will go up again, and we can get another 100% down the line into May, and maybe even into June if it can go that long. All right, guys, later.